All right, traders, it's Friday night. It's the 2nd of February, 2018. My name is Jameson. We're going to look at Litecoin here. So you can see here that I have this little bull flag here. I'm not going to call this. I'm not going to call it a bull flag anymore. We've rallied up here. We've climaxed. Charlie sold his coins here, and we've since dropped. It's not Charlie's fault, but since we've lost our technical strength, and I define technical strength as maintaining key retracement. So I do believe that if we maintain a 50% retracement, although it's not a Fibonacci number, that's bullish technical strength. But we did actually trade into and found some support along the 61.8% retracement, but we've lost that and we washed that out. But we are forming a descending wedge. And descending wedges are bullish because as a descending wedge is formed, the down thrusts become narrower and narrower, and it generally occurs to a point at which that, since it's a descending wedge, that supply contracts to a point where it actually has to rally out of this and then find demand. So I think as this matures, we'll see for the hold on the dear lifers, we'll see a rally out of this. And given the amount of demand that we have here at highs, it is very likely that we will rally back up at some point in time and we retest highs. The only way that I kind of hesitate is that we did kind of climactic volume, we broke back down, climactic volume again here, demand's less, again we come back up, there's no buyers, so we may have established that there is just no more demand there, and again that's why we're breaking down, and in the presence of breaking down, having a lower low, now we're seeing signs of weaknesses and supplies presenting, and in the presence of supply, right, because volume is nothing more than confirmation of commitment, and we have no commitment here, we're seeing weak hands, and the presence of weak hands will kind of continue to look for bids. Now this descending wedge is actually, and this is a logarithmic chart, so it'll keep the price increments at scale, which is why it looks funny when you move it around like this. But we can see that we, prior to breaking out, we had this long kind of consolidation period, and we never really confirmed this, this whole level here of resistance as support. So let's just take a look here, right? So if we just draw right through here, right? So this is a very important range that we broke out of. You really mean that we broke out of here, and this is the only back test we're going to have? We spent the life of, I don't know, I don't want to say the life of Litecoin. We spent a lot of time here consolidating before we broke out, and we never really confirmed this level of resistance here as support. So we can see here this descending wedge, this bullish classical chart pattern is trading into this consolidation range, possibly an attempt to confirm this prior level of resistance here as support, which would then again maybe bounce. Now we do have this, this is the angle of advance here, and you can see that we've actually lost the angle of advance here on the daily chart. Now earlier today I looked at a weekly chart, and it looks like we are holding on for dear life to maintain this angle advance on the weekly chart. Let's see if we can scale this real quick. It's kind of a pain in the butt. All right, so we had the lows. Let me be as liberal as possible. We have the corner there. We have a corner there. Nope. So at the present time on the weekly chart, we're losing this angle of advance. So there's some technical weakness as well, which again just kind of supports the idea that we're going to trade back into this this trading range here and try to confirm this level of resistance here as support on the daily time frame and on the weekly time frame. And we can look at the monthly. It's probably the same thing for the monthly. But let's come back to the daily time frame. All right, so we can also see that here's a 200-day simple moving average. So we have a rising 200-day simple moving average. So despite losing the angle of advance, the trend is still bullish. So really, we're just grossly overbought relative to the current trend. So opportunities in this rising 200-day simple moving average, I anticipate we'll likely find some buying. Now, given that we do have some supply, I feel that traders still feel that there's some risk on board. So we may see some consolidation underneath that 200-day simple moving average along this angle of decline, or the lower trend line of this descending channel. We're going to call this a supply line, because every time it hits the sucker, it actually falls. And you can see here that actually on this retest, it didn't even retest this and it's because there just was no demand. That just wasn't strong enough. Now let's get now, because we had a lot of people buy the dip. I bought the dip and sold it probably about 2 hours ago. Let's look at an hourly chart, and here we are. So I bring this up because on the hourly chart, what we do, actually, let's go back to the daily too and look at that real quick. Okay, so I don't want to say that we have a selling climax, but if we look at the volume relative to this trade range and to the descending wedge, this potentially is the selling climax of the of this wedge. Now, I think generally we for ascending triangles, descending wedges, we generally will complete at least 2/3 of it. So I don't think that we're quite there yet. I think this trade is still maturing, and again, we haven't traded into this level of resistance yet, so we have not confirmed this as support yet. I'll say that I doubt that we're just going to touch this and just rocket ship back up. We spent, again, a lot of time in defining this range. We'll probably spend quite a bit of time on top of this range again, which is good, because the longer that we build cause, the longer that we consolidate, the more upside potential that exists. Additionally, the longer that we trade laterally, if it becomes distributive, the lower your price objectives would be, the more it could actually break down. But at least it would give us an opportunity to evaluate the character of the consolidation, so that we can maybe establish a bias of whether it's accumulation or what we're looking at is distributive. So here we can see that we have more volume on the up waves, we have less on the down waves. The character which that we see, like the price spreads on the up waves are wider, so that means that during the up waves here, we can see that demand is overcoming supply with increased ease, and then these narrow price spreads on the way down means that supply is having a difficult time overcoming demand. That means it's just being bought, and again, very expansive, very restricted. So we can see here that this looks very characteristic of accumulation. That's the same kind of character I'd like to see during this anticipated consolidation as we attempt to make resistance support. Now again, let's go back to a lower time frame, and let's go back to the hour. So I bring this up because this actually may be a selling climax, and I say that because as we mentioned on the daily, this wedge is maturing. If this is a selling climax, this may be the beginning of the stopping action and consolidation. And that doesn't mean it just stops horizontally. This can continue to decline, but it would be potentially some reaccumulation as it falls, just like we can see how it's rising, and there's still buyers as this trend is rising. So let's go back to the hourly. So what we have is that we have a large introduction of volume, and then prices again, they kind of rally and they pull back down. So this may be our preliminary support. Our preliminary support, this would be our selling climax, this would be our automatic rally, and then our secondary test. This potentially is the stopping action of this complex on the hourly. So what is that? I'm kind of referring to Wyckoff methodology. So let's just look for a Wyckoff schematic here real quick. Wyckoff schematics, accumulation schematic. Here's a quick picture. Let's look at this one. So here's a Wyckoff schematic. So we may be right here. So we had the climactic volume, here's preliminary support, selling climax, automatic rally, secondary test. There's our stopping action in phase A. Now we can see we still have phase B, C, D, and E. Okay. Now let's again reintroduce the chart. So I'm potentially saying that we are right here, and that this is going to continue to fall within maybe this bearish descending channel here, but I would probably entertain the idea that this is going to be it. So here's our preliminary support, here's our selling climax, automatic reaction, automatic rally, I apologize, and then a secondary test. So this, because at the current time this is holding, so this may very well be our secondary test if this holds, and then we establish the trend range. I'm a little bit more pessimistic, and I think that this would be a true secondary test right through here. So I would anticipate that this is going to be our potential reaccumulation range as it kind of matures into this falling wedge that we have here on the daily chart. And then the amount of time spent in consolidation through here would help us measure upper price objectives, and we can see that a little bit later. But in the meantime, we had a very bullish, optimistic candle that we're all happy about today, but we still have some supply, still suggests that we have some downside. And although we may be seeing some reaccumulation or stopping action on the hourly chart, we can still make out that channel right through here as it presents on the daily chart. And that still, again, points toward this trading range. Again, we need to confirm this level of resistance here as support and consolidate on that level so we can rebuild cause and potentially one day rally back up and retest the highs. And again, I just want to point out that the 200-day simple moving average is rising, so the overall trend is it remains bullish. So I hope you found that informative. I hope you found that helpful. Good luck, guys.